Here's one of the simplest and most effective candlestick patterns available to traders of all levels. It's one of those patterns that's really easy to identify, to apply to your trading, and to earn money with today. Once you've applied it, please let us know what your experience is, and if you have any questions at all, just ask, and we'll be happy to get back to you ASAP. Enjoy!
By now, you are already able to correctly identify support and resistance areas and use them in conjunction with the stochastic oscillator signals and at least two major candle patterns, the shooting star and the bullish hammer. We made several videos addressing those patterns, and if you have not watched them yet, you may want to check them out once you finish this lesson. In today's video, we're going to learn one more candle signal that you can add to your trading tools and use in combination with everything you have learned so far in this video series. You see, the candle patterns we have shared with you so far involve only one candle. But today, it's going to be a bit different. Today's candle is called Bullish engulfing candle. Despite the fact that we need two candles for this signal, it is still extremely easy to recognize and combine with the previous candlestick signals you have learned so far. It is found at the bottom of a decline. Typically, that decline will end with a large red candle, but not always, as you will soon see. The next candle will open below the last red candle and will close above the opening of the last red candle. That means that this candle will be green and will engulf the entire range of the previous red candle. Hence the name bullish engulfing pattern. There is also the possibility that the downtrend ends with a bullish hammer with the green or red body followed by the bullish engulfing pattern, which of course should be green. As with the rest of the candle signals you have learned so far, the bullish engulfing pattern works best with the stochastic in the oversold condition. As with the rest of the candle signals you have learned so far, the bullish engulfing pattern works best with the stochastic confirmation. We use this as a way to validate the signal, and the next candle, let's say the third candle, should open in the upper half of the body of the engulfing candle or even above. The way to use it is simple. We would recommend you to look for the stochastic to give you the alert. In other words, wait until the stochastic is below the 20 area and start looking for your bullish candle patterns such as the bullish hammer or the bullish engulfing pattern. I should say that often the bullish engulfing candle works without the stochastic confirmation. However, we are assuming that you are just starting your trading career, so it will be better to go for the highest probability setup, and that involves the stochastic. If you see the trend finishing with a large red candle and the next candle opens at or below its closing and closes above its opening, then you have a bullish engulfing pattern. Now, here are a couple of things you want to consider. 1. The larger the last red candle, followed by an engulfing large green candle is, the larger the reversal will be. And 2, if the third candle falls below the middle point of the engulfing candle, that will invalidate the signal, pointing out that the bears are again in control. Hence, if the third candle doesn't open above the middle line of the body of the engulfing signal, don't take the signal. Now, let's see a few examples to learn how to identify the bullish engulfing signal properly. Here is a chart of the Swiss franc. You can see right here in the middle, prices were falling down and ended with this red candle. That was followed by a green candle that opened at the closing of the previous red candle and closed above the entire range of the candle. and that made it engulfing. So this candle here is engulfing this candle here. The next candle, the third one, opened in the upper half of the engulfing candle. So you can see it open up here. And typically you would use as a stop the low of the engulfing candle. And you can see that was never touched. And from here it went from 96 all the way above 1. So you can see the power of this setup. Let me show you another example. This one is in an hourly chart. The previous one was a daily chart. This is an hourly chart. So you can see that this pattern works in any or every time frame. Here is the crude oil that was falling in a clean, clear 5-wave pattern. You can see here down, up, down, up, down. It ended with this large red candle, which meant that the reversal was going to be much larger. And exactly as expected, that is exactly what happened. You can see the engulfing candle, the green one, open at the closing of the red candle and close above it. And the next candle opened above the engulfing candle. Again, stop was here, and that sent prices all the way from 79 approximately all the way up to almost 84. Let's check another example. This time we're going to use a lower time frame. This time it's only a minute time frame, so you can see that it works in any time frame. Here we can see a decline. This time it didn't end with a large red candle. You can see that also that works. The green candle engulfed the previous red candle that was the end of the decline, and then open above the green candle, making it a lot better. So that worked beautifully. Remember, the stop is below the engulfing candle, and that worked beautifully. It's 1 minute time frame, and in 1 minute time frame, look, we have this bullish engulfing candle here, and then we have it again here. See this decline ended with this red candle. The green candle engulfed the range of this red candle. The third candle opened above this one, sending prices up again. You see how beautiful it worked. And if that were not enough in a 1 minute time frame, look at the next decline. Ended with this red candle, and the next candle was green and engulfed the range of the previous candle, which again sent prices up again. You can see how effective this is. One of the things that we insist recommending is that you confirm with the stochastic. You can see on this chart is a 1 hour of the euro dollar, and you can see again the decline was in 5 waves and ended with this large red candle. The next candle opened at the closing of the red candle and closed above the opening of the red candle, making it an engulfing candle. It engulfs the entire range of the previous candle. And you can see here how the stochastic was already in the oversold area, confirming or validating this signal. And you can see in an hourly time frame how good this signal worked. This is a very good signal that is worth learning, it's easy to take, and is worth taking as well. So now for your homework. Identify bullish engulfing signals in your chart using different time frames. Don't just be happy with a 1 minute or 2 minutes or 3 minutes. Just go through all time frames so you can train your brain to identify these different patterns. Then verify that those signals were valid by using the stochastic or by using previous support areas. And finally, take trades in your simulator using all the candle signals that you have learned so far, using support and resistance areas in conjunction with the stochastic signals as well.
I hope you enjoyed this video as much as we enjoyed making it for you. If you found it useful and you'd like to receive more insights into trading, technical analysis, and trading psychology, just subscribe to our channel by clicking on the subscribe button below. The strategy we showed you today is only one of several strategies that we've posted so far. So here's another video for a candlestick strategy that you are bound to love. Check it out.